1310 WIBA and Ask the Experts with Wisconsin Capital Management online, wiscap.com. That's WISCAP.com. Great website to learn about Wisconsin Capital Management. Also, great opportunity to start a conversation. It's no pressure, no obligation. Just head on over to wiscap.com. That's WISCAP.com. And joining us this morning from Wisconsin Capital Management are Nate and Tom Plumb. Tom, how are you doing this morning?
Oh, Sean, we are doing very good. It was an interesting year, 2025, and we're about to wrap it all up.
Yeah, it was a very interesting one, that is for sure. And on to 2026. Nate, how are you doing this morning?
Doing wonderful. Staying unthawed during this wonderful 50-degree wind up here, but
Yeah.
yeah, it's enjoying. Looks beautiful. So
Yeah, it's really really nice, and as of course we kind of wrap up 2025 and look to 2026, we're going to talk about as our kind of our final episode right now, and of course it is airing right before we head into the new year. So instead of things like predictions or hot stock tips or scary headline, we're going to talk about an idea that creates more wealth than anything else. And Nate, I'll let you explain what that concept is.
yeah, we're thinking about the real concept we want to leave you with this year is the power of compounding, and it's just an incredible tool, and I'm excited about talk about it. And I know we have access to the greatest wealth machine ever made, and we're excited to talk about it.
And what I love about when we talk about this topic is it's funny as you mentioned, there's all sorts of really powerful tools, and there's you guys have amazing access to really really deep information. But at the end of the day, it comes down to some everything. I think everything in life is like this. Some really basic things that's kind of at the core of everything, and compounding it seems to be the biggest one. And Tom, I know you have you've got a little experience in this world. Let's get a little bit on your perspective when it comes to compounding.
Well, the big thing is you have to have time and you have to have a rate of return. So when you put those two together, it can be magical. It doesn't mean that every time that you put something into an investment, especially when we talk about equity investments, that they'll automatically go up from day one on every single day. But it means when you allow time to work for you, there will be more good days than bad days, and those good days can compound into some very significant financial security for you.
Let's talk, Nate. I know a lot of folks, kind of visual learners. I am one of those as well. Is it kind of an easy way to kind of visualize compounding?
Yeah, so I guess when you think of a chart and think of something going from like the axis and then kind of straight up to the right, that's linear scale.
Mhm.
So, like example, if increments of 10, so you go 10 plus 10 plus 10 plus 10, so you get kind of a chart that kind of goes high and right at a 45-degree angle. What we're talking about is a logarithmic scale with compounding. And so this means that you're kind of going by multiples. So you're going, usually they're done by tens. And so it's 10 to the first power, 10 to the second power, 10 to the third power, 10 to the fourth power. And you use these type of things like in sound waves, you use it for a Richter scale, and you use it for the power compounding. So we're using something that's used in many different fields.
Let's talk about. I know one of the things that it really helps folks kind of understand how this compounding stuff works is you start out with like a penny, for example, or $1 million, and I saw one of your notes kind of I thought did a really really good really laid out a really nice example of a couple of options, a penny or $1 million, and kind of how that would play out, Nate.
Yeah, I asked this question to my niece for Christmas. I said, would you like $1 million or would you like a penny that would double every day? And honestly, she chose the $1 million, which I think most actually
Yeah.
people would. But the right answer is actually a penny that doubles every day. So you have a penny, the next day it's two pennies, the next day it's four pennies, the next day it's eight pennies. So what does that mean when you actually give it just a little bit of time, right? So
Mhm.
day 10, you have about $5. Day 20, right? You have about $5,000. And on day 25, you'll have $167,000, right?
Wow.
But this is when the magic started happening. So on day 30, just 5 days later, you have over $5 million. You have over $5.3 million. And not that you're hoping to invest in, in the market and compound like that every day, but that's what we're going for. Usually, you can expect the market to double about every 7 years, and so the same magic applies. And so, back to that choice: do you take $1 million with a penny that compounds every day? The answer should always be the penny that compounds every day, and that relates to just stay in the market. You can't time the market. If you miss something like the top up days of the year, like top 10,
Mhm.
you missed essentially all of your year return. And so the real key that we're really trying to get people to focus on is that you just really have to stay in the game, right?
Mhm.
So you just really, you can't get scared. You're going to have, on average, 4 or 5 up years for every down year. Those down years are going to come. You should expect them. But yeah, don't be scared. Don't take your money out. You just use that logarithmic magic and to create wealth, and hire us for keep people to get the rate of return that you need to really make that magic happen.
And Tom, we live in a world these days where I should be able to get on my phone, order something, and it should be sitting on my patio tomorrow morning for delivery. We want everything instantaneous, and one of the things that's amazing about, and as Nate laid out, kind of that great example of a penny that doubles every day. It starts out kind of dull, and it's not instantaneous, but the payoff can be quite great, can it, Tom?
Well, Sean, it's a lot like, rolling a snowball
Hmm.
down a hill. It starts very small. It starts to pick up snow, and it gathers, and it all of a sudden starts to look like it's something more than just a little bit of ball, but it starts to get bigger and bigger, and eventually that thing starts to make some sense, and that's exactly what happens when you allow your investments to compound. Now that one of the keys, though, of course, is allow the investments to invest in themselves. So the power isn't just to have to start an investment and earn a return, but allow that return to get reinvested and to then compound. And that's where people who start early, they see a little progress. But when you start to make sense about what this will look like down halfway down the hill, or actually all the way down the hill, when you start to get to your point where you want your money to be working for you, that you'll really see what the values can be, and that discipline, how it pays off.
Talking this morning with Tom and Nathan Plumb of Wisconsin Capital Management, online wiscap.com. That's WISCAP.com. Hope you get a chance to stop by the website, learn more about Tom, Nate, and the whole team at Wisconsin Capital Management. You can learn a little bit more about them as well. Also, a fantastic opportunity to start a conversation with them. There's a little chat bubble that pops up, no obligation, no pressure. If you got any questions, you can always just head on over to wiscap.com. That's WISCAP.com. So Nate, you had mentioned earlier about folks maybe missing a couple of days here, missing a couple of days there. We still hear about that. People trying to kind of time the market and getting out at this time and jumping in at that time. Obviously, the track record isn't great for them. Why then do we keep seeing folks and hearing from folks that try to do just that by timing the market?
I think it's human nature that
Mm,
you have that kind of this illusion of control. Like you have to have this control of your environment. So when someone says they control this or that economy, it is really hard to do, especially in the U.S. economy since
mm,
it's so big and so diverse. So the timing feels kind of attractive. You feel like you want to be smart. You want to feel clever. Sometimes you're right, so it's kind of self-reinforcing. But the main thing is just is discipline. And so I read a lot of history just because it translates well to our
mm.
business. And Marcus Aurelius, who was with Cleopatra, he gave a great quote where he said, "We should discipline ourselves in small things, and from these small progress to things of greater value."
Mm.
So again, you don't have to be brilliant; you just have to be consistent and with discipline. And so people, we can put you in the right investments. Not all of them are going to work, but we have that just complete discipline
Mm.
every day that we go at it every day. So we're not going to win every day. The market's not going to win every day. But if you're consistent at it, we will be kind of like Lake Wobegon. We'll be a
Yeah.
little above average.
I absolutely love it. Talking this morning with Nate Plumb. He is a certified financial advisor with an executive MBA, as well as Tom Plumb, chartered financial analyst. Of course, Nate and Tom come to us from Wisconsin Capital Management, online, whizcap.com. That's WISCAP.com. Great website. Head on over there now. Again, that's whizcap.com. You can start a conversation with Tom and Nate right from the website as well. No pressure, no obligation. If you've got any questions, they've got answers for you. They'd love to talk with you. Again, just head on over to whizcap.com. That's WISCAP.com. We'll continue our conversation with Tom and Nate. We'll talk a little bit more about the power of compounding and what makes it such an amazing tool. We will do that next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts with Wisconsin Capital Management, online, whizcap.com. That's WISCAP.com. Joined this morning by Tom and Nathan Plumb. Tom is a chartered financial analyst. Nate is a certified trust financial advisor with an executive MBA, talking this week about the power of compounding, all the great things that it can do. And I know in the last segment, Nate had brought up timing versus time. And Tom, there's a lot to that, isn't there?
Oh, certainly there is, Sean, because, this year, like almost every single year, if you missed a handful of days in the market, uh, you basically missed the rate of return for the whole year. And when do those days happen? They happen basically when something has corrected the market and people are the sentiment is bad and people are concerned, and then the market realizes things aren't quite as bad as a worst case situation, and the market moves up pretty dramatically. And if you miss those days because you sold, because you thought things were looking bad, you basically miss a whole year. I was listening to one of the channels today about the business investment strategy, and this one person said, I'm feeling slightly more optimistic than I did in March. Well, the stock market was down in March of 2025. And by the time this person was feeling slightly more optimistic, the market had recovered 30% from those lows. So you really have to understand that the market does correct itself, but as Nate said before, it comes back and it's come back. You don't hit a new high this year without it being higher than the new high was last year or the year before, the decade before. So timing is very, very difficult because you're making multiple decisions, and each one of those decisions has to be correct. But time marches on. And basically, when you're compounding with good quality investments, they make money and they continue to make money, and that money they made gets reinvested, and that makes money. That's the magic of compounding.
Talking this morning with Tom and Nate Plumb of Wisconsin Capital Management, talking about that power of compounding this week. Don't forget, if you miss any part of the program, you want to listen back to this or previous shows, just head on over to whizcap.com. That's WISCAP.com. That's whizcap.com. You can learn more about Nate, learn more about Tom and the whole team at Wisconsin Capital Management. Also, great opportunity for you to start a conversation. No pressure, no obligation. Just head on over to whizcap.com. That's WISCAP.com. Click on that little blue chat bubble, and it'll start a conversation. And, I think sometimes you think about some of the different analogies, and I know one of them too, Tom, was, you think about planting a tree, and that's another great analogy for kind of understanding what compounding is all about, isn't it?
Oh, yeah, Sean. Basically, you're putting seeds in, and when you're buying an investment, when you're buying an equity, or even if you're buying something that's going to be paying interest, that compounding, that early stage, the best time to start a course is 20 years ago. The second best time is now. And that's today, to make sure that you are investing your funds to meet your financial goals today, but most likely in the future, because that's when you've got the investments actually working for you.
Nate, where do people go wrong with this stuff? What's kind of the mistakes that people make in this area?
Yeah, I think, well, use a tree analogy. So, you're thinking about maple tree. You have to wait at least 40 years before you can tap it, right? So
Yeah.
you have to be a little bit, delayed gratification. But people think about there's so many negatives that people put into people's minds to talk themselves out of it. But this compounding rule is not just for the rich. Poor people can do it. The middle class can do it. Anyone can do it. So this means putting, $20, $50, $100 a month, whatever you can do into the investments, and this law will apply to you. So it's not just something that's social class specific. This is
Mhm.
literally for everyone, and we want to help people do it.
Is it a mistake sometimes, Nate, for people that maybe they don't have an advisor, or maybe if they do have an advisor, they're just not a good fit for them?
Yeah, so there's, my dad and I had talked about this on previous show, but there's like asset gatherers and then investment people. If
Hmm.
someone's just an investment gathering and just saying, I just make pretty charts with investments and just kind of talk vaguely about them, or they have some investment guy behind the curtain, like in the Wizard of Oz somehow. Yeah, then it's time to talk to us. So if you don't have a financial advisor, talk to us. If you have a financial advisor like that, definitely talk to us. Don't chase the headlines. Don't get talked out in these like social media tropes that look really realistic these days. And don't be trying to be smart and jump into the market. So I think that um, there's a lot of ways to actually talk yourself out of it. But again, I had to go back to that discipline. If you're disciplined, the power compounding will work for you.
As we talked this morning with Nate and Tom Plumb of Wisconsin Capital Management, you can learn more online, whizcap.com. That's whizcap.com. That's WISCAP.com. Tom, is obviously one of the key points of what we're talking about this week is the power of compounding and that time aspect to it. And also, as Nate was talking there about, some of the mistakes that people are making is chasing, doing things like chasing headlines, or we talked about earlier, jumping in and out of the market, and or working with advisors that kind of play the game of investing, but they're not actually managing money. We go back to that time aspect, and you've been in this game for a while. You've been working and helping folks for a very, very long time. You don't survive and be as successful as you are without learning a thing or two. And we talk about, and I know anyone that was listening in that earlier segment, we talked about your passion for compounding. These are real things, and you really do want to work with folks and really help them put together that great portfolio and really put together something when it's coming to actually managing their money, not just pretending to invest.
Exactly. Sean, the big issue isn't just can I find a good stock or can
Mm.
I find a good bond or is this investment in vogue right now? But it's basically coordinating, putting your investments to work for you in your specific situation. And you need to talk to your advisor. You need to talk now,
Mhm.
not next year, not someday, but you need to talk now because every decision that you make is going to ripple through the next few years. And if you have some guidance and some discipline with those decisions, it's a significant difference in what your end result will be. Just as we were talking about all of these aspects of compounding, you have to have it work for you. You have to moderate the volatility on a day to day. You have to avoid the real significant pitfalls for real risk. And you have to have investments that work for you, your personal life, your lifestyle, your family situation. And it only happens when you have that personal conversation with someone like Nate or Tom Plum.
Talking this morning with Tom and Nate Plumb of Wisconsin Capital Management. Speaking of that conversation, they make it so easy to start. Just head on over to the website, whizcap.com. That's WISCAP.com. You can start that conversation. No obligation, no pressure whatsoever. Just head on over to the website, whizcap.com. That's WISCAP.com. And Nate, as we look towards the new year, I know a lot of folks make New Year's resolutions, and it's a good time to be reflecting and thinking about where we've been and, of course, where we'd like to go. It's a good time to really start thinking finance, isn't it?
Just stop reacting, get organized, and start compounding. I mean, make that your New Year's resolution.
I love it. Any final thoughts? I'll give the court to you, Tom. Anything to kind of close out the new year or close out the 2025? Any kind of final thoughts for this year?
Well, this year's it was been a pretty good year in the investment markets. Not spectacular like some years, but it's been a very good year. It's been good year after a couple other good years.
Hmm.
Makes people pause. Am I concerned that the market could go down? Well, yes, it could go down, but I'll tell you that every time it's gone down in the past, it's gone back up, and so you need to have the structure that allows you to be a good long-term investor, and I think we can help you with that.
It's a great day to do that. And of course, as we look towards New Year's resolutions and talked about that tree analogy earlier, 20 years ago was the best. Second best is today. Today is that great day. Start that conversation. Learn more online. Get to the website, wizcap.com. That's WISCAP.com. No pressure, no obligation. Start that conversation right at the website, wizcap.com. That's WISCAP.com. Tom, great talking with you. You have a happy new year, and we'll talk real soon.
Thanks, Sean. It's always a pleasure to get a chance to chat with you.
It's always great talking with you. Nate, you have a fantastic new year as well, and thank you so much for all the great information.
Yep. Happy New Year, everyone, and be safe.
News comes your way next right here on 1310 WIBA.